First of all, I want to thank you all for your time. I know it's getting into the silly season and everyone's busy. I thought with Vicky from Paysauce, a couple of pertinent issues for your own businesses and for your clients there as well. Thanks to Ken at the NZQBA for facilitating this, and a quick shout out to them as well. As far as an organisation goes, I know they provide a lot of good learning opportunities. And in my past, I've always found it's really good to connect and network with people going through exactly the same things. They've all seen the same issues that you come across. They've all got smart ideas. And so it's always good to share those around. So today we're going to talk a little bit around payroll legislation and supporting cash flow for your clients over the Christmas period. First of all, Vicky from Paysauce will do a bit of talking on her piece. I'll talk a little bit around the cash flow piece after that, and then we will get into a brief question and answer session with myself and Vicky following. I would recommend, if you do have any questions that come to mind throughout, there is a little chat function up the top, the little speech bubble. Feel free to send those throughout, and we'll either try and deal with them all at the time or look to get into those towards the end of the question and answer session there as well. So first of all, I'd like to introduce Vicky. Vicky's been in the payroll industry for about 20 years now, primarily on the platform side. And so she started with Smart Payroll and has spent the last 7 years with Paysauce and is currently their head of partner support. So I have been told if Vicky doesn't know something, it's generally not worth knowing. She did ask me to qualify that though and said if she doesn't know of anything offhand, she will go away, find it and come back to you. So pass on to you, Vicky, and to take us on from here.
Thanks, Shane. You can hear me all right, right?
Correct,
Just making
yes.
sure. Okay, thanks everybody. I'm just going to share my screen. It'll just be a moment. Right, here we are. So, first of all, thank you for having me here today. I'm not really the expert on everything, but I do know a lot about what people have queries on with Christmas time. So I used to be on the help desk for many years, and this is really all about the sort of questions I get asked around Christmas. And sometimes they seem pretty common things, but there's always a little twist to them. So this is what we're covering today. Basically, Christmas and New Year dates. I know that you'll know these, but a little bit about that. So don't need to worry too much about this. We're going to cover each one of these as a separate slide. I'll just move into the dates. Now, I know that you will know what Christmas Day is this year. It's Sunday, and Monday is the Boxing Day. So Tuesday is the transferred Christmas Day. I'm not really going to talk about the days, except to say that if you're running pays for clients, it's fine because you'll be knowing what you're doing. But often bookkeepers and accountants are just advisors for their clients. So you will probably need to remind your clients that the banking days this year, if they normally pay staff on a Monday or a Tuesday, would now be on a Friday before Christmas or on the Wednesday after. And this can be a bit of an issue if they do want to pay the staff on the Friday, because what happens is that with so many pays going through on Friday before Christmas, if anything can go wrong with the banks, it will be that day in the year. So Thursday could be the best day for them after all, but just to let them be aware of this. Also, I get a lot of questions about casual staff around Christmas time. So this is when people start to think, what do I pay a casual worker? If an employee normally works on a day that would be now a public holiday, they would qualify just the same, even if it's a casual employee, paid out their 8%. They would be entitled to the same things that a part-time worker would be getting. In fact, this is probably the right time of year to start thinking about whether a casual worker is really casual, if they do have this issue where they're inquiring about what to pay a casual worker. If they're inquiring, then possibly that's not really a casual worker anymore. But also, casual staff will possibly also qualify for an alternative public holiday if they work on the public holiday. So you know that staff get time and a half for working on a public holiday and an alternative day to take another time. A casual worker, if it's somebody brought in to help on busy times, but also someone that normally works for you on a busy day. If they normally work for you, say you get them in on every, say, Monday, then they would need to be entitled to exactly what a part-timer would get. And as I said, have a chat with them about whether that's really a casual worker anymore. Moving along to the next slide. So if staff need to be paid in advance, you need to let the employer know. And sometimes it's not easy to pay the staff in advance, especially if they're staff on timesheets, or it might be a cafe or something like that, and they don't know what the staff are going to be working right up to Christmas. So you might need to warn the company that if they are paying the staff on the Wednesday after Christmas, then they need to let the staff know ahead of time. It's illegal not to tell the staff ahead of time if you're going to be changing their payroll date. They might need to make other arrangements for some bills to go out. And you're supposed to give them at least 2 weeks notice of this too. Although sometimes it's not that easy. So also, if staff are planning to go away on leave, they should be entitled to ask for their full leave payment before they go. So if one of your employees is going away for 3 or 4 weeks, they may need to pay for accommodation while they're away. It's not fair if the company won't even just look at this. So if a company definitely can't pay the staff ahead of time, they need to let their employee know, and it's the best opportunity for them would be to pay the staff, even if it's just 1 or 2 of them that need this money desperately before they go away. The Holidays Act legislation says that the staff should be able to request that leave in advance, and you should come to an agreement with them about this. One thing you've got to be watching out for is if your employers try and squash a couple of extra weeks into a single payroll, the tax will increase and the staff will feel shortchanged on that. So they shouldn't do that at all. If they're using a payroll system, they should try and still put the pays together, and at least, even if they pay them beforehand, that's fine, but try and keep them onto the same cycle that they would normally have been paid on, and the tax will be the same as it would have been. And if you pay your staff a bonus, or if your companies pay a bonus, then they've got to be careful that if it will increase the employee's pay for the year, and IRD may request an extra tax payment from the employee if you pay out ordinary time as a bonus. And one of my customers actually did this last year by mistake. Normally she paid a bonus in a different way, which we'll cover in a minute. But what she did was she paid an extra week's pay straight after their normal pay on that Christmas week. And she treated it as a bonus. So what happened was the staff started to get chased by IRD around about July the next year, because she was paying weekly and she'd actually paid them for 53 weeks in that year instead of 52. So make sure that your companies are aware they need to pay a bonus in the correct way. And this is where we move on to bonuses. One other thing to watch out for is that sometimes companies offer their staff a net bonus. This is a terrible way to do it, because it means that any staff that have deductions from their pay, such as KiwiSaver or child support or student loans, they're actually going to end up with more money because the net had to be grossed up. So if the employer hands the staff a net payment, or tells the staff they're going to get a net payment, they're probably going to have to turn to you as their bookkeeper or accountant and find out how to gross that up afterwards. And if you've had this happen, you'll know what a nightmare it can be. So it's best if companies offer a gross bonus. Yeah, so that's an important thing to think about. If a bonus is paid out, it will be taxed at a flat rate, of course, and employees can complain about the fact that they're not getting as much as they thought they were going to get. So I think it's important to let companies know that if they are paying a bonus, to be aware of what to say to the employees when they start complaining. So if they warn them that it is always taxed at a flat rate, then at least you will cut down on the number of calls perhaps about this from the employers if you tell them beforehand. Sometimes customers ask for a non-taxable bonus to be paid, and we always try and discourage that. There's strict rules about paying a non-taxable payment, and it's not a bonus. So somebody will be paying the tax on that, and so normally the company would have to pay fringe benefit tax, of course. It's best not to encourage that kind of thing. They can pay a discretionary bonus as a gift from the company account, and it is taxable, but it won't increase the employee's average weekly rate when the calculations are made for the last 52 weeks in future payments for leave. But it is taxable, of course. Sometimes customers ask whether they can pay a non-taxable amount if it's not paid as cash, and they can. They can pay, I think it's up to $300 every quarter in vouchers or gift certificates, but that is not cash. So this is something you will have already thought about, making sure that there's enough leave for staff before they take their leave at Christmas. But sometimes the companies don't think that way. So if you're advising some companies on what to do around Christmas, make sure that they have a good look at it well before the Christmas break. Sometimes customers want to advance staff their leave days if they don't have enough stored up. This is risky because employers can allow too much leave to be taken that way. And sometimes an employee might not stay long enough to have gained back the leave they've been advanced. And if this has ever happened to one of your companies, you'll know it can lead to a few problems. For one thing, sometimes customers say to me, oh, it's fine. He signed a piece of paper to say that he would pay it back from his final pay if he hasn't gained all his leave back by the time he finishes. But that doesn't always stand up because an employee can legally give 2 weeks notice in writing that they have removed the permission for an employer to take deductions from their final pay. So an employee that knows this can actually talk their way into having lots of leave days overtaken and then change their mind just before they terminate and say to the boss, we don't want you to take any deductions from our final pay. And as long as they give 2 weeks notice in writing, this stands up and this takes precedence over the earlier agreement that they might have made. So actually, I've seen this happen a few times. So it is a real thing. So don't let, if you can, don't let the companies advance any leave unless they're really sure they'll get it back. Sometimes employers are confused about the payments that go out for the annual leave. And you just need to remind them that annual leave payments are based on the average weekly pay over the last 52 weeks. Compared to their ordinary pay. And if the staff have had commissions or bonuses or anything like that, just overtime, of course their average weekly pay could be higher. It's just, they seem to always clamour at you afterwards when the payments go through that, why is the pay so high? If you warn them beforehand, then it will cut down on a lot of anxiousness afterwards. So, employers are also, I'm just adding a little bit more in here about annual leave and taking the leave for the statutory holidays or the public holidays over the break. Sometimes companies aren't 100% clear with their staff about who is working on a public holiday. It's really important that they advise their staff that they are not to work on a public holiday. Now, sometimes customers come to me and they say, well, I didn't tell them that I didn't want them to work, but Johnny turned up to work on Boxing Day and he said that I hadn't told him not to, so he did. So do I have to pay him? Well, the thing is that if an employer hasn't made it super clear to the staff that they must not work, and an employee turns up to work on a day they would have normally worked and expected to, yes, he will have to pay. So it comes down to communication with the companies and their staff. They must be super clear about who is working and who isn't, or just that nobody works at all. The other thing that I get asked about too is sometimes employees promise that they will work, but then they don't turn up to work. And that can be a bit of an issue as well. So if an employee turns up or doesn't turn up to work, that is, and they promised they would, and it was on a public holiday, the employer needs to give them their public holiday taken day off anyway. He can't just dock them for the day because they let him down. Because the employee didn't have to work anyway on that day, so it's like just the old stat days. They didn't have to work, so they still get paid for that day. So I think we've already covered about the rate being higher if an employee works on a public holiday, and also that will increase the rate when they're taking their next lot of leave, of course. Okay, just moving forward. Now, what about closing down anniversary dates? So if a company closes down at Christmas time, all the staff are expected to take their leave at the same time. The annual leave is always the same each year. Staff have to be reminded about the close down date, and it's really common that they're not. Employers expect that it happens every year, so all the staff know, blah, 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 but really they just need to remind them. And sometimes that day does change depending on what day of the week it is. So they must be reminded at least within 2 weeks of Christmas of the close down date. Staff that began employment in the current year can be paid out their 8% that they've gained already. And then the anniversary date will be the same as the rest of the staff from that moment on. The staff that are paid out their 8% are taxed as a lump sum payment for that. The company can allow the staff that don't have enough leave to cover close down days, but they have to be aware that it may be something that they're risking that they won't get paid back. I think that's pretty much all we need to say about that. This is always a tricky one. Annual leave cash ups. Staff often want a cash up around Christmas to just sweeten the deal a little bit with their annual leave. All cash ups by staff must be requested in writing, and this is really important to remind your companies about this. There's such an important reason for this. If the staff must request the leave in writing, and the company should confirm back in writing whether or not they're going to get that cash up of leave. If it's not in writing, it can be very hard to prove later on whether or not that was a true cash up or whether it was a bonus. So I've got plenty of examples in my mind of customers that have relied on a handshake agreement with their staff, and it didn't stand up later on. So the customer will receive a request in writing from the employee. The customer approves or declines it, and they don't have to approve it if they don't want to. Staff can't force the boss to give them a cash up, even if they've got tons of leave stored up. And the boss can choose whether or not to allow different staff to have the cash up. And it can't be any leave that's gained this year. It has to be entitled leave from the previous year. So it must be well and truly gained back 52 weeks from the employee's anniversary date. So there's strict rules about this, and it's really important to remind your customers about it. It can't be more than a week, but it can be a day here and a day there. This must be left over from the previous year, and it will be taxed as a lump sum payment. So normally there's higher tax in that case, which can cause a bit of strife. Need to remind the employers about that. So staff can't be forced to take a cash up either. Even if, say, Johnny's got 6 weeks of annual leave stored up, the employer cannot say to his employee, look, Johnny, I want to give you a cash up. Do you want to take it? He can't do that. Can't encourage him to take it or ask him about that. And so it can only be 1 week, no matter how much leave is stored up. But the employee could take a week right before their anniversary date rollover and a week after if they've got lots. That means it's still in the next anniversary year if they've taken an extra week after the anniversary date. So if the cash up will be taxed as a lump sum, and it will show up on the income tax returns, but it will not increase the employee's average weekly rate for future leave taken. So the cash up is sort of almost segregated from the rest of the earnings in that they pay tax on it as part of his income for the year, but it does not increase his average weekly rate when leave is calculated after that. But the funny thing about this is that annual leave is different to alternative leave. If an employee has gained some alternative leave for working on public holidays, and they can take a cash up of that after a year of that has been stored up, but the alternative leave will increase their average weekly rate for any future leave taken if it's in the last year. So annual leave is different to alternative leave. Right, and this one is a goodie. Employers terminating right before Christmas. You probably already know this, but you must remind your employers about it. If the employee has entitled leave, you must count on the last day of employment, count from the next day onwards, all the entitled leave days. So if the employee took that leave, will it cross a public holiday? And if it does, then the employee will receive the public holiday for that day too. And of course, the 8% will be added on top of that value because it's part of his income for the year. If the employee doesn't have any entitlement days, but he only has some 8% to be paid out, then the rule doesn't apply, of course. He's not eligible to receive anything extra. And that's it. That's the end of all my slides. Thank you for listening. I'm passing back to you, Shane.
Thank you there, Vicky. I really appreciate that. Some real nuggets in there. There's one thing I've learned in all my years of business is if there is one thing you do not want to mess up, it's employee pay. It has a massive impact on culture, well-being, and staff turnover. So thank you for that. A few things I hadn't even come across before. So make sure we're doing stuff right moving forward. Before we kick into my little piece, I'm hoping to get a poll out to you just to provide some feedback to the NZQBA around your current situation. So I'll just launch this poll now. It'd be great if you could choose the most applicable option for yourself, and please just let me know if that doesn't come through in a second. Okay, fantastic. So it actually looks like most of you are bookkeepers with your own clients. So some great information there, Vicky, as well. One of the things actually from my perspective is just around the key issues. We're in some quite uncertain economic times at the moment. So obviously a lot of you have your own clients out there, a lot of the working with your own business. So it'd be great if you could just let us know what's most relevant for your situation at the moment. Right, so looking here about cash flow at about 50%, staffing shortages right up there. Fingers crossed some of the new policies from the Labor government coming out does something to put towards that. And obviously the perennial need more sales. Quite interesting, I think, inflation and interest rates not registering that much there as well. So thank you for that. So what I'll do now, I'll share my screen, talk through a little bit. Again, if you do have any questions throughout, feel free to add them to the chat function, and we'll look to cover those when we can. Give me a second. So once again, thanks to the NZQBA for having us along, and Vicky from Paysauce for joining us here. As I mentioned before, I'm head of business growth with FundTap. So we provide on-demand finance for small to medium businesses throughout New Zealand and Australia. My background started life as a taxman, moved to a chartered accountancy firm for a number of years. I've owned a couple of small businesses and then moved into helping management over the last few years. So I've been neck deep in cash flow for as long as I can remember, and understand that it's really key to helping businesses survive, first of all, and thrive. So first of all, I'll just set the current scene for what small, medium businesses are seeing at the moment. hopefully run through a few key little steps that you can provide either your clients or yourself to help through from there before we move on to the question and answer session. So I always like to start with a quote that I come across a while ago. Thought it's sort of really relevant to our current situation. Revenue is vanity, profit is sanity, cash is the reality. So the actual author of this quote has been lost in the annals of time, but tends to ring true in most situations that I've come across. We see a number of profitable businesses that are either failing or stagnating due to not being able to pay their ongoing operational costs or missing out on potential growth opportunities. So I've actually attributed this quote basically to every single business owner ever. As I mentioned, there's quite a bit of uncertainty in the current economic environment. You'd be well aware of the sort of changes to the economy over the last 12 to 36 months. And we're seeing that this can create a lot of pressure on your small to medium businesses, even on well-run and profitable organisations. So us, we see cash flow as the single largest challenge for SME today. See from the poll results before, sort of over 50% of you tended to agree with that as well. So seeing there's a number of factors affecting SME cash flow, and that there's a possible cash crunch coming. OCR increases. We've gone from a record low of 0.25%, sitting at 4.25% now. Annual inflation last quarter was about 7.2%. Supply chain issues. So while they have got better since the real COVID impact, there's still some quite long wait times for product, which can impact money going out the door for deposits and money coming back in from selling that out the other end. We're seeing again larger clients, supermarkets, large corporates, dictating extended payment terms to their smaller suppliers. So all of a sudden, if you pick up a big contract, you've got wages, materials to buy, sitting on 30, 60, 90-day payment terms from your client can have a massive impact on cash flow. Obviously, wage inflation has been in the news a bit lately, so sitting around at 5, 6, 7, 8%. So wages are placing additional cost pressures on small business at the moment. So as far as cash flow being a big obstacle for SME growth, it is actually the number one reason for business failure. There's also a large risk of reputational damage. So New Zealand is at 2 degrees of separation. Being unable to pay your bills on time, being unable to pay your staff on time can have massive implications to how smooth your business is running. It's also the risk of constrained growth or missing out on opportunities. If you do have a large contract come up and you need to bring on another staff member, place a large order, that lack of cash flow can really place a restraint on your future growth. Within that though, there is some risk and opportunity. So we've seen some significant challenges in the SME cash space, especially by those businesses that are backed by property. As I mentioned before, the OCR rate's gone from 0.25% up to 4.25%, and the Reserve Bank are talking around an engineered recession and OCR rates of about 5.5%. If we look at small to medium business lending in the New Zealand market that's backed by a property, there's about $3.9 billion that is due for rate renewal just in 2022 alone. So there's a significant amount of people coming off fixed rates and having to fix on the higher interest rates. So if we assume a 2.6% increase in the average interest rate, that's $100 million out of small to medium business owners' pockets every single year. So the actual impact and flow on for wages and circulation of money will have quite significant impacts on the economy. And obviously backed by property, it's all on a market where most places are expecting a decrease of about 10 to 20%. Some of the major economic commentators, banks, are picking up to about 25% decrease in real property prices there. 97% of all small businesses in New Zealand fit into that small to medium category. So it's a large driver of New Zealand's economic engine. And as I mentioned before, 83% of all business failures are directly attributable to a lack of cash flow. So that's all my doom and gloom side, but I guess I thought best to just set the scene with the realities of what small business owners are faced with today. A lot of them are time poor. They're on the tools. They're doing their paperwork at night, contracting out to bookkeepers, but they don't have a lot of time to look at the business as far as efficiency and improving operations. And that's a real, I guess, key opportunity for bookkeepers and moving to that advisory type level. So finding problems and then suggesting solutions. So if we look at some really easy ways to help improve cash flow on a pretty regular basis. So timely invoicing, if your client yourselves are on 14-day, 28-day terms, obviously the sooner it's invoiced, the sooner it's paid. So a real regular and timely invoicing schedule can have a massive impact on cash flow. Automated reminders. So a lot of the main accounting software platforms, there's a number of partners at the moment, can set up automated reminders before the invoice is due. Use of automated reminders has shown to increase payment on time by about 15%. Deposits and progress payments. And again, this depends a lot on the industry you're involved with. But if you're able to negotiate it with your clients, deposits and progress payments can go a long way to helping cover the material and wage costs throughout a work program. Communication with bookkeeper. Obviously, as I mentioned before, and our experience shows, is that ahead of business owners and ahead of accountants, bookkeepers are the ones that truly have a good understanding of the cash flow of a business, because you're in the nuts and bolts of it all the time and you're not distracted with other things. So communication with your advisor or your bookkeeper, or just keeping on top of it yourself. If you can identify an upcoming issue, it's a lot easier to solve that problem. Good collections management. So this is in effect putting a system in place to what happens and when with overdue invoices. Shown that within 3 reminder notices, 73% of overdue invoices are paid. So again, that can have quite a major impact as people are dragging out their payment timeframes. Negotiating terms of trade. So this is with your suppliers and customers. So I'm always a big fan of asking the question. My wife always tells me if you don't ask the question, the answer is always no. So I'm a big fan of get on the phone with your clients, look to negotiate them to start. Can you get deposits, progress payments? Can you put them on 14-day terms instead of 21-day terms? Extrapolated over a number of clients can have a massive impact. Same again with your suppliers. A lot of them might be 20th of the following month. Can we pay them on the 30th? Can we push that 2 weeks back to 3 weeks? Again, if you're getting little gains on the margins either side, can make quite a big difference. Again, from my accounting days and this at the moment, I'm a big fan of simple cash flow forecasting. And again, this is knowing when your peaks and troughs are coming and putting a plan in place to cover that. So actually knowing what the future looks like allows you to look at the options, put the right plan in place, so when it does occur, you're ready to go and sorted there. Out of that, there's 3 key steps that I think you can either take in your own businesses or possibly talk to your clients about. First one's automate accounts receivable, negotiate terms of trade, and cash flow forecasting. So if we look at automated accounts receivable, so this is, again, sending out the invoice, looking for, reminders coming up, and then chasing up should something come. So what I'm recommending is set up a system, so something that's regular and scheduled for generating invoices, sending reminder payments, and done later on. Again, a lot of the accounting software, and there's a lot of partner platforms out there that will actually do this whole process for you. Collections management, talked on how important that was before. Sometimes the easiest way to generate cash flow into a business is to send that email or pick up the phone and talk to your client. A lot of them, it's not always an easy conversation to have, but can have a massive impact on a business's survival. And again, automated or outsourced. So we're a big fan of bringing in people who have specific expertise in an area so you can focus on what you are good at. Again, Xero, etc. sends automated emails to increase payments on time. We work closely with the company DebtorDaddy, so they outsource effectively the entire process through from invoice creation to reminders, right through to collections management and down the legal route if required. So if yourself or the business you're working with doesn't have the time or expertise, it's worth looking at some other outsourced options there to help you through that. In terms of trade, again, another real key one. Again, depending on the industry, you may be able to negotiate deposit and progress payments. So we're finding, seeing a lot of businesses, tiny homes as an example, and we've seen some fall over and we've seen some really move ahead. And the ones that have really moved ahead have been able to negotiate deposits and progress payments to cover the costs of building those materials, and then they're taking their profit on that last one through from there. The carrying costs, potential logistics delays, that side of things, is having a massive impact there as well. Again, negotiating with suppliers and customers. Not always an easy phone call to make, but again, it's asking the question, and if the survival and health and opportunity for growth for your business and your life depends on it, then it's something I definitely recommend you doing. Another one that's not well utilised by small to medium business in New Zealand, although we do see it a little bit with like power companies and telcos, is early payment discounts. So how much is it worth to your business to have that cash in your bank account now, as opposed to say 3 weeks time? So there's something you can do yourself, but there's other platforms, another partner of ours, Parakeet, that effectively automate that whole process for you. So again, it's something you can do yourself, but it's around working out the value of that money in your bank account now and potential lost opportunities out the other side. Cash flow forecasting. Again, it's having the knowledge in place so that you can actually put some, some solutions in down the track. As you know, most small business owners, the jack of all trades, they're doing paperwork, they're on the tools, they're managing staff, they're working through a whole lot of payroll complexity, as Vicky mentioned before, and it's quite hard for them to step away. So actually doing simple cash flow forecasting is so important in understanding, are there any potential issues coming? If no, great. If yes, okay, well, here's a solution that we can put in place. It also helps, I think, from a bookkeeping point of view, is there's a real move from the compliance to the advisory. Bookkeeping's no longer about crunching numbers and data entry. As I mentioned before, you're quite often seeing the red flags before, seeing the smoke before there's fire. And so being able to provide some solutions or advice through to your clients can go a long way to adding value in your own business. Number of platforms out there, obviously, to help you with that. And this is my little plug for our one, Cashflow Buddy. So it's something we've developed alongside FundTap, imports all your data direct from Xero, and you can create a cash flow forecast within 10 minutes. So it's currently under beta release, but would be available for free for everyone on this webinar. But having said that, there are a number of other platforms out there that you can tie into your existing accounting software and help sort of provide some value for your clients from there. So FundTap, I guess, what do we do? We're on-demand finance. So it's like invoice finance, but built from the ground up to fit small to medium business. It's finance when you need it and no costs when you don't. So that means there's no establishment costs, hidden fees, or lock-in contracts. From my accounting days, we do pre-approved accounts, so it's never drawn down, there's never any cost, but provides that safety net of same-day cash flows required. Big thing with New Zealand being a 2 degrees of separation, it is a private facility. So effectively your clients would never know we existed. Integrates with all the major accounting software to help smooth the process. and really quick turnaround. So generally, if we have someone coming to us, it's because they've got an issue now. And that's why I always recommend cash flow forecasting. It's better to be sort of proactive out the front end. So in short, it's the fastest and easiest way for businesses to access cash they've already earned, whether that's for unexpected expenses or opportunities for growth. So just to run through some key points from today, I guess it's my personal opinion that the cash flow crunch isn't coming and that it's already here. And we're starting to see that through our business a little bit, and it's likely to be coming through to your clients there as well. Holiday season adds additional complexity to what are already time-poor business owners' lives. So any additional information you have help you move from that compliance to advisory piece. For me, knowledge is key. Great thing with the accounting software platforms, payroll providers, that sort of thing. A lot of knowledge is at hand. First thing is identifying a problem. The next one's having sort of some solutions out the back end. I'd really recommend you to be proactive and to automate where possible. So again, that's tying in solutions to remove all of the additional work so you can focus on really where your value lays. Partners, Paysauce, lovely platform, love the company. Here's my little plug for you, Vicky. But there's a lot of platforms out there, as I mentioned, that can actually make your clients and your own business's life easier. So it's worth investing some time to look what's out there and to see how you can actually smooth your workflow. And again, it's all about adding value. Without adding value, none of us have jobs. And so it's finding out where you can add value to your clients and just sort of making that a reality. So that's me, Shane Laurence, FundTap.co, cashflowbuddy.co. So thank you for your time there. What I will do is just share one more poll with you, if that's right, because I understand part of this is learning and education. We're obviously partnered with NZQBA, and we want to make sure that we're getting the right information out to the right people at the right time. So what I'll ask you is, if possible, if you would like to know a little bit more about our Cashflow Buddy tool, and I can follow up with you from there. And Great, thank you. And so what we'll do now is we'll move into a bit of a question and answer session with Vicky. We've had a few queries come through from people. So I will go on now. So you're ready there, Vicky?
Yep.
Fantastic.
What have you got?
So first one, my employee is on ACC. I'm giving the team a bonus. Can I give one to that employee as well?
Okay, so the answer to that is yes, you can give a bonus to a person who's on ACC, but you have to be aware that if you pay anything taxable over and above their normal, maybe you're helping with 20% extra to balance the 80% they're getting with ACC. If you pay anything over and above that, ACC may dock the payment the following time that they pay it once they find out. So that information is normally shared between IRD and ACC that there's been an extra payment made. So it's probably not worth it to make an extra bonus to that person on ACC. So the other thing is sometimes people do, that reminded me, sometimes people do say, do I need to make another payment to the staff over the Christmas break when they're on ACC, thinking along the lines of what was brought up a few months back with the new legislation changes that I don't know if you might have heard, but the government was going to bring in something about ACC payments would need to be bumped up by the employer if a statutory holiday or a public holiday taken was made to the staff. That was dropped altogether. So companies do not pay anything extra over and above to a person that is on ACC, unless it's already agreed.
Fantastic, thank you. And I'll just put you on the spot here a little bit. If that person on ACC was to query, why did my teammates get a payment but I didn't? Would you
Well,
have any recommended
yeah, well,
reply to that?
definitely. The answer would be that they'll probably end up paying it back because ACC will short pay them next time for the value of that bonus. So it's just going to cause stress if that happens. If a company wants to pay that employee the bonus, they should wait till the employee returns or comes off ACC.
Fantastic. Great. Thank you. Next question. So is RDP or relevant daily pay paid on average daily hours for all days worked or for that specific day of the week?
Okay, so that's a confusing question because RDP is relevant daily pay. So what you're supposed to do, if say somebody is going on, say taking a public holiday off, say Boxing Day, you're supposed to look at what the employee would have got for that day. That's their relevant daily pay and pay them that. So it's not based on an average for that particular kind of payment. It's based on what they would have got if they'd been at work. For instance, if an employee was, say it's Monday, if they usually worked 5 hours on a Monday and they work 8 hours on every other day of the week, they should still get paid for their 5 hours for that Monday because that's what they would have got if they'd been at work. But I think that the person that asked the question is confusing it with what if you don't know what that employee would have got on that day because they might be working different hours all the time. So their hours could fluctuate so much that you're not sure what they would have got. Well, then what the employer is meant to do is calculate the average daily pay based on the last 52 weeks. That means from the end of the last pay period backwards 52 weeks, what's the average daily pay? And legally, they should be offering that instead or paying that instead if they don't know what the relevant daily pay would be. Sometimes,
Fantastic.
sorry, just
No,
thinking
that's
about
all
it
right.
as we go. Sometimes employers like to give the last 4 weeks average daily pay instead of the 52 weeks. That's fine to do as long as the last 4 weeks is not less than the last 52 weeks. If it's better for the employee to have the last 4 weeks average daily pay, then by all means go ahead with that. And that can be fairer, but it's not actually that they have to, because legally it's 52 weeks.
Okay, so in that case, if someone, say 12 months ago was working an average of 40 hours per week, but at the moment we're working an average of 20 hours per week, you'd be required to use the average over the last 12 months.
Yes, that's correct. Yep.
Yep. Okay, fantastic. And we've got a question, someone's seen around Pay Now platform that you have within your software. What is it and what are the obligations on the employer?
Okay, so Pay Now is essentially it's an agreement. Well, it's a feature that we have with the BNZ. And if an employee is, say, on a salary or a regular worker, the employee can request to have an advance on their wages, and they're having an agreement between the BNZ and themselves, basically. So if the employee is on a salary and they've worked a portion of their pay cycle, let's say, just for example, say it's a monthly pay, what happens then is employees find it difficult sometimes to wait for a whole month to get paid. So what they can do with Pay Now is they can request an advance on their wages, maybe even take four requests, one every week, as many as they like, really. The system, Paysauce will look at what they have to pay out as far as tax or PAYE, maybe student loan, child support, any other deductions that are already preset. It'll look at that and it will ring fence that amount, and then it will also take another percentage again off that, so that looking for just other things that might crop up over that month, and then it will allow them a payment from there onwards. So it's coming off the net pay for the employee, and at the time that it's advanced, a deduction is set up to claw that payment back and send it straight off to the BNZ at the same time. So the employer doesn't have to do anything about this or even potentially know about it, because it's an agreement between the employee and the BNZ. And the BNZ do this with no fees charged. So this was set up, this was an initiative set up to stop employees going to money lenders or payday lenders. And we've saved employees millions of dollars now. I think they released recently a statement on how much has been saved in fees alone for employees.
So
Yeah,
on there, Vicky, there's
good.
no so there's no cost to the employee to bring
No
forward their
cost.
wages, and no cost or obligation to the employer.
No cost or obligation to the employer, and no fees to the employee. So there's no need, there's no reason for it to harm anybody there, as long as the deduction can be made from the employee's pay to take that money back for the BNZ. And
Okay.
BNZ are taking care of this with the employee, so it's their debt to the BNZ, not to the employer at all.
Okay, fantastic. No, that's good. Actually, I've known a number of employees, especially around this time, going to their employers for an advance on wages or something similar. Okay.
Yeah.
Next question. So, what options are there when an employee does not have enough annual leave and does not have holiday pay to cover an annual shutdown?
Okay, so if the company shuts down, then the employee is paid out their 8% holiday pay they've gained that year. So if they haven't got enough leave to cover, say they've been taking leave all through the year, so they get to the end of the year and the shutdown happens and they're suddenly without any leave, they really don't qualify for anything extra. As long as they were aware of this, that the company shuts down, that's all it is. The employer can advance them some leave. In fact, I think I covered that in the webinar. If they do advance them leave, they have to be aware that there's a risk that they might not get all of that leave back. The employee may not stay long enough to have that clawed back. So the employee can go on leave without pay if they want to do that, or just not be paid. They always get some statutory holidays or public holidays taken, we call it now. They always get those. So they're always given something anyway.
Okay, fantastic. No, that's good. And is there any other questions from anyone else attending? Give it a little minute for anyone to chat through.
They can always send questions afterwards too if there's anything.
Yep, absolutely. That's great.
Me.
Okay. Thank you for your time. I will ask you to fill in one more poll if that's right, just around Paysauce. Again, if you'd like some further information, please let us know. Otherwise, I'd like to thank Ken and the NZQBA for inviting us along. Thank you for all of your time. Wish you the best of luck leading up to the Christmas period, and hopefully a relaxed couple of weeks in the middle. And thanks again to Vicky just for coming along, sharing her knowledge and everything from there. So thanks again, enjoy your day, and I will send a recording of the webinar for anyone who would like it. Thank you.
Thanks, Shane. Thank you, everybody.